one as we speak right now. But let's take the conversation forward. We've got Dipan Mehta joining in on the show, and Kunal Bothra too is here in the studios. Gentlemen, hi, afternoon. Kunal, let me first start off with you. This range-bound index, how do you trade it?
You've seen the movie Chak De India?
Of course.
Yeah, so in the last, there's this scene where there's a lot of confusion when there is a penalty shootout.
Yes.
Today's market is exactly like that. The Nifty
Which scene? The last shot?
The last penalty
shootout?
shot.
Okay.
So, the Nifty... So one leg is in this direction, one leg is in the other direction. So Nifty is showing signs of maybe a support at 25,000, 25,050 levels. But today the Bank Nifty is on the verge of a breakdown, just below that 55,000 mark. And in the signals which we've seen yesterday, for example, banking was one of the strongest sector. And for the strongest sector to reverse immediately on the next following day, I think puts in a lot of question mark that, in terms of sanctity of how strong the short-term bounces are for these individual indices. The India VIX, which was up yesterday, today the India VIX is down 1.5%. So a lot of mixed data points, for the markets, and that generally indicates that we are looking at maybe a start of a fresh trending point for the index. That trend could be on the lower side, but then we'll wait out for that confirmation for the benchmark indices. So for Nifty, I think if we break below 24,950 mark, which is another, I think, 75-80 points from current levels, I would probably expect that we may drag substantially lower for the Nifty over the near term.
Okay, lower indications is what Kunal is picking up. Dipan, hi, afternoon. Kunal drawing inferences from Shah Rukh Khan's Chak De India. But what do you think this market is telling us? Any script it's playing too?
Well, I think it reminds me of one of the other jokes also by Ajit, which says to put the person in liquid oxygen. And the oxygen won't let the person die, the liquid won't let the person live. So markets like that, continuous flow of mutual fund money won't let the market correct, and fundamentals don't let the market go up. So we are stuck in that range for a long time, almost a year now, in a very narrow range. Because look, at these valuations, you really need a lot of valuation support for the prices to move up, and there's still continuous supply of paper from FIIs, from promoters, from IPOs, and then whatever is left is being invested in the secondary market. So that entire wall of money which is coming in is finding a supply, and there's a nice fine balance. There's a lot of money waiting in the sidelines, no doubt about that as well. Could be foreign money, could be smart Indian money as well, but they're not finding the valuations right. And sure, I think a lot of hope has got created with GST cut and the beginning of a very good festive season. But we've been caught on the wrong foot many times, expecting earnings to move up this quarter, last quarter. That has never happened. So I think now investors are waiting for the proof of the pudding before allocating more funds at these elevated valuations.
And so rightly described in that dialogue, and I literally Googled it right now because I didn't want to get it wrong. Liquid isse jeene nahi dega, oxygen isse marne nahi dega, right? But we will talk about what's liquid and what's oxygen in just a bit. But we've got Prakash Priyadarshi, my colleague, joining in, and he's got some exclusive info for us. Shipping stocks, they're pretty upbeat in trade, and sources are now telling your channel that the cabinet has approved 3 schemes for the sector with financial assistance of more than 65,000 crore rupees. Let me take it across to Prakash and get in more info. Prakash?
Yeah, it's a very crucial development for the shipping sector, as sources are indicating that the Union Cabinet has approved 3 flagship schemes for shipping sector. In fact, the entire value chain will be developed. Approx rupees 70,000 crore has been approved by the Union Cabinet as a financial grant that will be provided through these schemes. If you look at the structure of this scheme, the Cabinet has approved Maritime Development Fund, Shipbuilding Financial Assistance Policy, and Shipbuilding Cluster. So these are 3 important schemes which have been approved by the Union Cabinet with an outlay of rupees 70,000 crore. If you look at the financial assistance, shipbuilding financial assistance will get rupees 25,000 crore. Similar amount will be provided for Maritime Development Fund, and approx rupees 20,000 crore has been earmarked for shipbuilding development. The objective is to provide financial support to develop entire value chain ecosystem in the shipping sector in next 5 years. In fact, the finance minister has already announced this scheme in the budget for financial year 2025-26. And today, what the sources are confirming that the Indian cabinet has given its nod to these proposals. At around 3 p.m., there is a formal briefing by the government where formal announcement will be made. Back to you.
Okay, Prakash, thanks for taking us through all those exclusive details. Still on the back of this news flow, mixed moves coming in from the shipbuilding stocks. Some of them are doing well, Shipping Corp for example, but it's other names like Mascot Dock, Cochin Shipyard, GE Shipping, they are slightly subdued. But on that note, we'll slip into a very short break and keep the conversation going just on the other side.
Hi Nagraj, good afternoon. And Nagraj, firstly, let's have your take on the shipping counters then, because these stocks are having a good day indeed. Add to that list is Muscat Dock as well. Help us understand, how do you see this space overall, any of the stock that is looking good to you?
Hi, good afternoon. Shipping counters have been showing consolidations recently. We have seen some good amount of upside bounces in the last few sessions. In that, Shipping Corporation of India is the one stock that has been moving up gradually recently, now showed some sustainable up move in the last few sessions, and the overall chart pattern is looking positive. Chartically, our 10 and 20-day EMA have been consistently offering the support, and even volume has also seen some good breakout with RSI moving up from the higher levels. So overall chart pattern is looking positive for the Shipping Corporation as well.
Okay, so that's the take on the charts when you talk about some of these shipping counters. But Kunal, before the break, you were talking about how a sector looks slightly untrustworthy when it's leading one day and the reversal immediately. On the flip side, you could say the same thing about FMCG, a top sectoral loser yesterday and now on top of the charts. What would be your take on something like this, a move like this? Because on one hand, you do have GST that's expected to be a structural story for FMCG. But other than that, on the charts, what's leading to such a quick turnaround?
I think it could be a point where the markets are just about going to maybe a risk-off mode and trying to churn or rotate sectors. I think that's the only rationale which you could understand, because when you look at this, it's all the FMCG stocks which have corrected in the last, I think, one or 2 weeks. For example, Dabur from 480 levels, the stock has come back towards 420 mark, 580 to 520 levels. You've seen Britannia correcting by almost 5% to 7%. And I think in that aspect, most of the stocks have corrected in the tune of 5% to 10%, HUL, Godrej Consumers, etc. And these were the huge, the major underperforming sectors, even on a relative strength basis in this last 1,000-1,500 point rally for the Nifty. So I think in that aspect, it could be just money moving back from the traditional performing sectors and back towards the underperforming ones, and the ones where the risk reward starts to look attractive. What we need to see, is that whether there's a follow-through price action for even these FMCG counters. That's the only missing link, which is what I was mentioning, just some time back, that even if the sector showing signs of a recovery and a major revival on a day like yesterday, today I think you're seeing signs of a breakdown as such. So the lack of follow-through action is the one which keeps the markets into puzzle.
Dipan, we were just chatting with A. Bala from Aditya Birla Sun Life this morning, along with Feroz Aziz from Anand Rathi, as to how the GST rationalization could also not just mean more consumption, but also more financial savings, and how some of the money, or rather more money, into now household savings could also find its way to equity markets. Do you think that's the right premise? And should then one be structurally bullish on the capital market theme?
The savings are hardly a few hundred rupees. In fact, I think that the consumption will give a boost to consumer lending. And in our analysis, Bajaj Finance was a big winner. Disclosure we and our clients are invested is a big winner of this GST cut, because a lot of big ticket items, automobiles, washing machines, refrigerators, and other household appliances, air conditioners, which are bought on EMI, the demand for finance will go up over there. So rather than thinking in terms of how capital market will benefit, it will benefit from from improved fundamentals. Higher volume will lead to higher profits. But to assume that there will be more savings, I'm not sure it's a bit of a stretched logic according to me. But yes, I think banks and NBFCs benefit from higher lending for big ticket items, and there could be an improvement in overall consumer spending and consumer sentiment, which is always good for the banking sector, but not from capital market point of view that more funds will come into the market.
Okay, got that point. But other than Bajaj Finance, any other way to play the GST rationalization? Any other additions into your portfolios or recommendations, Dipan?
I think we know all the winners, automobiles to an extent, value retailing, cement, consumer appliances. These are all the winners. Thankfully, automobile companies have reported bumper inquiries and sales as soon as the Navratri season has started, which is very positive, and I think they are clearly the biggest beneficiaries. Same thing playing out as far as out of household appliances also are concerned. Although it is not the peak period for air conditioners, I think going forward, once we hit the summer months, this GST cut will benefit demand over there as well. And on the whole, I think this is a trigger for trying to get the consumer to get moving again, to start spending again, and try and neutralize some of the negativity which has come from all the various Trump policies which have been quite detrimental to India. So I think it plays out favorably in that point of view. And let us see, I think we all remain in hope to see the earnings improve going forward and see how this GST cut can trigger. There has been an interest rate cut also, that also should benefit. And lower taxes also should mean lower TDS. So the government has done everything it can to boost the consumption, to boost the economy. Now I think the ball is in our court.
Absolutely, it is. Dipan, thanks as always for taking the time out and joining in today. Okay, let's move on. And as we begin the countdown to the last lap of today's trading session, let me get some more trading ideas. Kunal, what's on your list?
So I'll continue with something which I recommended in the morning, Kaynes Technology. That's a stock which has done reasonably well. One of the better, gainers in the FNO segment also today. Looks attractive even at current levels. The stock has crossed the levels of 7,400, which I had earlier targeted. Now traders could look at a fresh, target on the upside, 7,600 for Kaynes. And for traders who are looking at a fresh buy, could trail the stop losses to 7,360. And the second would be about SBI Cards. This could be an interesting breakout candidate. The stock had done reasonably well over the last 2 weeks, still on the verge of a breakout. And I think with the momentum coming back, the volumes improving for SBI Cards in the last 2 weeks of price recovery, would look out for targets in the range of 904. Stop loss could be kept at 872.
So those are the buy calls coming in from Kunal, a buy on Kaynes Tech as well as SBI Cards. But Nagraj, what about you? Which are your stock ideas?
Yeah, I have two stocks from alongside. First one is NTPC. Chartically, NTPC has been in a strong uptrend over the last few weeks, and recently it has broken above the 200-day EMA, which was not sustaining above it in the last few attempts. And clearly, the overall chart pattern is looking positive, including the volume breakout as well as the RSI. Currently trading around 347, 83, 48 levels. One can look to buy at this point of time. Upside target would be around 368, and one can place a stop loss at 335. Second one is from a metal side, Steel Authority for India Limited, SAIL. SAIL has been in a consolidation phase at the higher levels and placed at the hurdle around 137 odd levels. The overall chart pattern is indicating a strong possibility of a sharp upside breakout after the consolidation. Whole metal pack is moving up, currently trading around 136.80, 137. One can look to buy at this point of time. 145 is going to be the first initial target, and one can place a stop loss at 133.
Okay, so those are a couple of stocks that our technical experts are liking, both Kunal and Nagraj. But on that note, we'll slip into a very short break, and when we return, we'll track the last half hour of play.